Thank you so much. It's a privilege and an honor to be invited here to the Festival of Media. Actually, I had a chance to chat with Charlie and the folks at C-Squared a few months ago, I guess 4 or 5 months ago, and proper madman style over a couple scotches in the office. Don't tell the boss that, but I said, you know, Charlie, there's a real revolution that's taking place, and we're hearing about it, some of it today in terms of, and yesterday from some of the panelists about how advertisers are taking advantage of real-time trading and real-time bidding. The same is true on the publisher side, and publishers are seeing a tremendous growth in terms of increased revenues, additional advertisers that they're able to bring to the equation, and to be able to create more competition and more efficiency with their businesses as well. And I think this is really important, especially as we look at some of the, I guess, the pig markets as they were articulated as earlier this week, because these are markets where publishers actually stand to gain the most from automation, where they have the opportunity to get rid of many of those operational overheads that plague the business today. So for many of you who don't know who the Rubicon Project is, we work with somewhere around the neighborhood of about 500 premium publishers around the world, optimizing and actually managing the auction on behalf of about 6.5 billion of their impressions each and every day. So premium publishers all over the world leverage our technology to essentially maximize the overall yield and to bring in as many potential buyers as they possibly can into the equation. Today, in many countries, we are Viviki's largest source of demand. And actually, I think if you look up here, which is quite interesting, the UK and France being extremely large markets in terms of their adoption of programmatic trading and real-time bidding. Even the Netherlands with 2.3, I think probably the country which is lagging the most behind is probably the Germans, being as measured and conservative as they traditionally are. But interesting to see the growth that's still occurring all throughout not only this region, but around the world. And where we are, so this is the last bit about what I'll talk about in terms of what we do. We're obviously headquartered in Los Angeles. We've been around for 6 years with offices in the UK, France, Germany, and Australia. And I think really probably what started the business and what has always been the mission of the Rubicon Project is to automate the buying and selling of digital media. And when you look at display in terms of how it is actually delivered, it is broken. It is fundamentally broken in terms of how it's executed. There was a panel earlier today talking about the rise of the machines and the algorithms versus the humans, but the real problem is actually this one question: which tools are actually powering 80% of digital sales today? And there's actually 2 tools. One is Excel, and the other one's the fax machine. And the challenge with this is that it becomes an incredibly laborious 42-step process that looks like this. So from the very beginning, from the time in which the advertiser briefs the agency in terms of what they want to deliver, until the time that actually that campaign runs and is billed and collected by the publisher, there are 12 pairs of hands and 42 steps in this process. So when you're in a market the size of the United States, where the average sales guy is bringing home $8 to $10 million in annual quota, or an average order value of $100,000, $200,000, the reality of it is you don't care about how many ops people that it takes to execute on the campaign. However, you bring that to a market the size of the UK or France, that $100,000 IO now becomes the equivalent of a $20,000 insertion order. You bring that to a market the size of the Netherlands or Finland, Italy, Portugal, Spain, that IO now is 2, 3, maybe 4,000. And that publisher is actually losing money as soon as the insertion order comes off the fax machine. In fact, some initial research that I did, the last company I was with, we did an analysis to understand what was the cost for the publisher and in this case us, as soon as that I/O came off the fax, it was £700, not including cost of sales, not including cost of goods sold, just from the time in which we took the I/O off the fax until the time that finance and accounting collected on that payment from the agency. So incredibly laborious and incredibly expensive. And for us, it was a social media company. All we had to do was keep the lights on the servers blinking. We had no editorial content that we had to pay for, no journalists in the field, no bureaus, no stock imagery licensing that we had to pay. And so if you think about it from this perspective, digital is broken in a big way and must be automated for it to grow. In fact, if you look at the fixed cost, these are Nextmark's analysis, it's roughly $40,000 just to plan the media campaign. So to plan and execute on it, it's $40,000. So if you think about what that means for overall efficiencies and lack of efficiencies rather, it means that we're spending a tremendous amount of overheads just executing the campaign, and this is just the agency side. And to add each new media outlet to the plan is another 15 hours worth of work. So what it means is essentially all of the plan is then concentrated only in in those publishers with the highest reach. And so what happens is it looks like this. So the people who are actually gaining the most are the big five, where all the spend tends to concentrate with Google, Yahoo, Facebook, AOL. And it leaves out many of the other relevant and endemic titles that could and should be on plan. Now, the demand-side platforms are doing a great job being able to target those sites, and we're starting to see a big growth in terms of the role of private marketplaces. And I think one of the things that we're seeing, actually, and I think that I was quite interested in some of the research that came out yesterday from the agency Jeopardy panel, was the fact that less than 10% of brands understand or get real-time bidding or real-time trading or what a DSP is. And essentially, if you saw the ComScore analysis earlier, the one brand that was seeing that tremendous lift was Kellogg's. And Kellogg's is doing a tremendous amount of work through real-time advertising and leveraging their own DSP and building a trading desk of their own. So what's the solution to this? The solution to this problem is essentially automation at scale. It's to be able to aggregate all the inventory as much as possible and to be able to automate the entire process, allowing the DSPs and the trading desks that are leveraging those demand-side platforms to execute the plans and the media buys today. In fact, we just did a quarterly business review with Viviki, and what has been and what used to be only a direct response business, now 30% of the money that's coming through that is now brand-based, which is fantastic to see and exactly what we mean by executing on that path to automation. And this has happened before. So if you look at every other industry, where it starts is largely down in the remnant world, right? What's considered remnant is one person's premium, and vice versa. But if you look at how it started, NASDAQ started as over-the-counter stocks, penny stocks. Nobody wanted really to touch them very much until 1986, and then everything started to truly automate as the bulletin board now actually runs the largest company in the world, is now traded on NASDAQ. If you look at Sabre Systems, what started off as a platform for American Airlines to essentially move their unsold seats now powers the entire travel industry in the United States. It's fascinating to see the roots actually are in remnant. And the same with eBay, right? eBay used to just be really nothing more than boot sale or garage sale inventory people wanted to get rid of. Now a car is sold every minute on eBay. Same with Rubicon. So we started a business largely with ad network optimization, the remnant. And what has moved very quickly into real-time advertising, real-time trading, by becoming essentially the Sotheby's of online advertising. And I think, I wanted to bring this up because and don't mean to be, don't want to dig too low into what actually real-time bidding is all about, but I think it's important for everyone to understand the exact process which is taking place. So essentially, instead of selling inventory on a tranche of impressions, they're actually occurring and being bought on an impression-by-impression basis. And so what's happening is that more than one buyer is being exposed to this process. So it starts obviously with the site. That site then delivers that impression to a SSP, such as Rubicon. We execute the real-time bidded transaction, or a bid request to the DSPs. We have over 100 various demand-side platforms and individual bidders bidding on this inventory in real time, executing an auction on their side to look and determine whether or not they want to buy that one impression based upon the user and based upon the site itself, and then returning that bid request with a bid and an offer for that impression and the ad tag and the advertiser name. And so essentially what's happening is, and the reason why I'm digging into this, is that RTB is the underpinning of the automation and the path to automation that this industry is going through. This entire process takes place 3 times faster than you blink your eye, roughly 150 milliseconds from the time in which the initial bid request goes out until the time in which the creative lands in front of the user's eyes. And so what this means is this automation really allows for a significant amount of operational efficiency gain. So if we see when we started executing and opening up inventory to real-time bidding 2.5 years ago, it was minuscule. Now it represents more than 70%, depending on the market, but in most major markets, over 70% of the revenue on the platform is now coming from real-time bidded sources of demand. And if you look at versus tag-based buys, which is the traditional way in which ad networks would buy their inventory, it surpassed it in January of 2012. So fascinating to see the growth and the migration away from tag-based buys and in towards private marketplaces and real-time bidded. So if we look to, and I think this is some of the research that IDC did not too long ago, but one of the most interesting things is the CAGR that is being expected. So a 59% growth rate over the course of the next 3 or 4 years. And I think probably the most interesting piece is over here on the right when you look at premium sales and the growth of premium sales. And why is this occurring? And the reason for it taking place the way it is because publishers need to do a better job of becoming more efficient with their selling process, and the buyers need to do a more efficient job of executing their buying process. And so private marketplaces are really beginning to blur the line. So what used to look like this in terms of where RTB sat in the inventory pyramid or the inventory stack, it sat somewhere in the middle between what was Class 1 and Class 2 non-guaranteed, as mentioned earlier, really kind of creamed the crop or creamed the top bit of the impressions off the top. But now what's happening is that private marketplaces are developing. And because the URL is exposed in the bid request, and because the advertiser name is coming back in the bid response, what we're seeing actually is the ability for programmatic and private marketplaces to emerge and blur the line between what is premium and what is remnant, right? Now, essentially, when an advertiser has a first right of refusal for a particular impression, and can choose not to take the impression from that particular publisher site. Essentially now what you've got is essentially the opportunity to charge a rate card price for that particular impression. So if we look at the value and the effective CPMs that publishers are garnering from private marketplace deals, and even more importantly, one of the great things about real-time bidding and with the process itself is that it allows for data also to be communicated and passed safely in the process. So publishers that are executing first-party audience data and appending that to those segments are actually seeing twice as much as private marketplace deals. Private marketplace deals see 2 to 3 times that of just general open auction RTB. And open auction RTB is a yield of 2 to 3x that of traditional ad networks. So you can see the price growth and the yield for the publisher begins to look a little bit more like what the yield is from their direct sales. and how they're able to maximize their overall performance from that inventory. And so for the agencies in the room and the trading desks behind them, one of the great things is that they have access to tremendous amounts of high-quality inventory that's available with private marketplaces. So people like The Guardian, The Daily Telegraph, News International's properties, the Wall Street Journal, Financial Times, et cetera, are all making this inventory available and appending the first-party data assets to be able to maximize the overall yield from this inventory. And this actually, when you think about what the opportunity and the prospect is for automating this entire industry, it's no longer about taking the man out of the middle, but about making that person much more efficient and allowing those sales teams to concentrate on the big, interactive, high-valued, innovative sponsorship opportunities. And what we're starting to also see is obviously the rise of the agency trading desks. 2 years ago, many of these names were pretty much unknown. So people like Amnet, for instance, or Viviki or Acuin, most of these have their roots in search. And many of those folks and that talent from inside those agencies is moving very, very quickly into the build of the agency trading desk. In fact, many of these guys are, Havas, I think, has publicly said that they're going to roll out AFI-Perf across 20 markets this year. Amnet, 15 markets this year. So tremendous growth from all of these agencies and the rise of these trading desks to perform the executions of these automations. And so what does the future of the agency actually begin to look like? And I think this is really fascinating. It's a slide actually I stole from Joanna O'Connell at Forrester. And I think we're starting to see the same thing begin to emerge on the publisher side as well. But essentially what used to be direct response, siloed in one area, and essentially custom buyers in the other, is that programmatic trading is beginning to enable both sides. So both direct response and brand-based, broad-based buys to be able to execute or to be executed programmatically. We're already starting to see the sense of this. So Viviki is a great example of an agency which is starting to move very quickly in this way, right? Where the platform-based buys are taking place, leveraging the DSP that they use and executing against a broad range of inventory pools that are being made available. So with that, I will leave the future in your all's hands. And if you'd like to see more about how private marketplaces are built and executed and the opportunities that you as a publisher may have for the publishers in the room, feel free to come on downstairs in a few minutes' time for the other session. So thank you very much, and I'll turn it over. Cheers.